Hey everyone, it's Nick with Us Versus Herd. If it's your first time here, hit that subscribe button. If you want to get notifications for when we go live or when we post videos, hit that bell button. If you're not yet a member of our free options trading group, hit the link below, post all our trades in there. We have a great family, great community. We're just trying to build with each other, connect with each other, and just it's on a more personal level. So if you want to join. What I want to talk about is how to trade or trading when the market changes. So for a lot of us, or a lot of people, we get in the habit of always doing the same trade. Like let's say we're profitable on something and we did it again, we were profitable, we do it again, we're profitable, and it kind of gets into like a habit per se. And like the one thing about the market, like I always tell people, the market's an ever-changing puzzle. It's always changing. The market is always doing something different. The market's always going to change, and we can't foresee the future. We can get hints of where it's going to go, but we can't particularly foresee where it's going to go. We don't know if the market is going to go higher tomorrow or lower tomorrow. I mean, we can guess. I mean, we all speculate, especially as options traders. We're speculating. Everything about options is about speculation. Yes, there are a lot of indicators of things going up or down or news or whatever the case is, but the market is what the market is. The market's going to do what the market wants to do. And at the end of the day, it's not the market that has to change. It's you that has to change. You have to adapt to the market. The market's not going to adapt to your trading style. The market's not going to come to you every time. You're gonna have a good string of wins. You're gonna also have a string of losses. Like everybody knows that anybody trades, losses is part of the game. How do you mitigate those losses? How do you minimize those losses? How do you hedge against those losses? How do you play defense? And really, what I want to talk about here is how do you know when the market changes, or how do you know when your strategy no longer fits with the market conditions? And as you know, here's a 2018 chart here of the S&Ps, the S&P 500 over this course of the year. This chart, I'm going to go over a couple of years of the S&Ps just to kind of show you different markets, different years. And even if you haven't been trading that long, you can go back any year. I'm using the Thinkorswim platform on this. You can go back any year and look up what the S&P did, or what the Dow did, or what a stock did in 1990, 1999, 2005, whatever you want to do. You can go back, we can show you that. But in this, I'm just gonna pick recent news because it's relevant. This is 2018. In 2018, the market forever changed based on where it was a year ago. Last year, let's go for context here. Let's just pull up 2017 here. We're going to show you 2017. Okay, so we're just going to pull up 2017. 2017, I know a lot of new traders got started in 2017, and they were just saying, oh, all I have to do is buy calls, it goes up. All I have to do is buy stock, it goes up. All I have to do is sell puts, it'll go up. And in 2017 was the year, I want to say, for the lazy trader. It was the confidence booster for the lazy trader. And you weren't making money because you were good at trading. You weren't making money because you were outsmarting the market. I mean, literally, if you look at any stock, it looked pretty much like this. Any tech stocks were going up 100% last year, or more than 100% last year. If you pull up any tech stock, it's just amazing. It was great. It was amazing. People made a lot of money. People lost a lot of money because typically in the market, as we'll show you, there's pullback. There's times in the market where it's going to supposedly pull back. But 2017 was an anomaly. 2017 was the year of zero pullback, and any pullback that happened got bought up within a day or two. If the market dropped, and when people got nervous when the market dropped, like these little red bars here got dropped, they look nothing like today. Like these little red bars are nothing like the red bars that we're seeing today. Yes, the market has red days. Yes, the market has green days. But 2017, it was a low volume, low volatility year. Like we were pulling. The VIX was at single digits last year. I mean, it was insane, the volatility, how low volatility was. And honestly, for me, it was a very boring market. And in this type of environment, all I had to do was really sell puts, buy some calls, but you had to, if you're buying calls, you had to buy them further out because, it took a long time to get there. Like as you can see, like there's a lot of green days here, but they were slow. Like the S&Ps some days like moved only $5, only $3, and that was actually a good day. Some days it was just like unchanged, and like it was kind of boring. Yes, we had some, you know, face ripping green days, but you know, it's nothing like if you compare this chart right here to 2018 right now. You know, if we're going into 2018, you know, compared those, if you look at those red bars and look at these red bars, or even the green candles, I mean, we're having huge green candles, huge red candles, and the market is in a different environment. Like, I can't just go and sell puts anymore. I can't just go buy calls anymore. Like, you just can't do that. And in this environment, like what I'm doing is a lot of normal trading. Like, this is two-sided trading. Like, there's a lot of things going on. Like, it's hitting support, it's hitting resistance. There's a lot of two-sided trading here. And as you can see, you know, it's a good market for both sides, long and short positions. Like, both sides are making money right now, and you know, you need a two-sided market. You can't just keep going up every day. And if you guys remember, in December and January, really, if you look at this, I mean, it was the last leg up. Like, this was the last final straw, 2017, green every day. Like, I had some big months back in December and in early January, like humongous days, and it just kept going and going and going and going. And like, if anybody has been trading that long knows that's not sustainable, knows that you can't just go up every day. And yes, it's easy money. Yes, you can make money, but it really doesn't create any traders. It doesn't create true investors or true traders. I mean, people at this point, when they were hopping on this train, it was fear of missing out. So-and-so made X amount of dollars on Amazon. So-and-so made X of dollars on Netflix. Let's get in now. And then, as you know, in February, it all came to a crashing halt. Like, we just, you know, it gave back massive gains. It ripped down, and people were scared to death because they haven't seen volatility before. A lot of traders have not seen volatility before. And if you look at the VIX, like I was telling you guys, I mean, we were at single digits last year. Volatility, like, we had some spikes, but it really was nothing compared to like this year. You know, we went all the way up to 50 already in February, and you know, right now we're trading in a range between like 15, 16, and 25 or so. We're trading in a range, and that's because the markets, if we go back into the S&Ps, that's because the markets are experiencing some volatility. And in this, you know, for me right now, I'm doing a lot of Stringles. People are like, hey, are Stringles your only strategy, or you know, hedging is your only strategy? And right now, you know, in the market as it stands right now, the market, you're most likely going to put a position on is going to go against you. So right now, I'm playing a lot of defense. I'm doing some longer term trades. I'm doing a lot of Stringles, so that way I can benefit. I'm not doing a lot of selling. Yes, I technically should be selling more credit spreads or that kind of thing, but honestly, I don't feel comfortable doing it because the market keeps going way outside the expected move. And I haven't been, honestly, I haven't, like myself, I know people have been making money. I myself have not personally been making that much money on credit spreads. Like, yeah, I'll be making some money, but it's like, you know, trying to squeeze water out of a rock for me lately for credit spreads. So I've been making a lot more money on buying Strangles. So, you know, that's the difference. The market has changed. And if you go back, let's go back like 5 years just to kind of show you. You have to adapt to the market. You have to change with the market. Like, let's go back here. We'll just go back. We just went back 5 years. So let's go back to here. What year is this? This is 2014, okay? So as you can see, like this is the bullish market. I mean, we've been in a bullish uptrend since what, 2008, 2010. And, you know, but the red days were red days. The green days were green days. Yes, we took the stairs up, elevator down, stairs up, elevator down. I mean, obviously it recovered rather fast, and you know, but this is a normal market. Like, yes, you want to be probably in this kind of market, you want to be hedged more bullishly, you want to be trading more bullishly, but you also want to have that protection for those down moves, because those down moves come and it hurts. Like here, you had 2 months of pretty green. This month was pretty flat in 2014, and then it gave it back. And then, you know, in a normal market, like when you're kind of slowly consolidating, grinding up, you either are, you kind of reach a point of divergence. Like, you know, the bulls and the bears can only go back so far. Either one is going to overtake the other sooner than later. And then here, like in this example, you know, we went from, you know, pretty flat. Finally, the bears broke it down, and then the bulls just bought it back up, and then the bears took it down, and the bulls just brought it back up. You know, and but this is just different trading charts. Let's go into 2015, which was like a flat year, even though it doesn't look flat at all. And in this there was you know, if you were trading in 2015, what happened here? There was panic in the Asian markets. This was sort of like a flash crash, and as you can see, like if you were holding stock all year, really you started the year at like 2050, we'll say, and we closed it out at around 2050 on the last day of the year. This bar down here is the 2016 bar, first candle in 2016. So, you know, really went nowhere. But for like an options trader, this is a good opportunity. This is great. Like this like you could buy all day at support here and short all day at resistance, and you could make money. You know, if you were shorting every time it hit, you know, the 20, 21, 20 range, it came back down like 4 or 5 times. Same thing here, came back down, and then it kept, you know, was getting beat down towards the end of the year here. But yeah, massive dip, got bought up. But this is a great market. Like, but you in this scenario, you don't want to have like what worked here isn't going to work in today's market, because, you know, we're not bouncing off support. Like 2015 was a great year for traders, not great for investors. I just keep that in mind. I said traders, and then, you know, 2016 really had that down move. And we started out at the bottom, like 2016 really just started out at the bottom here. And, you know, it was a slow grind back up, like slow volatility. And then 2016 really just led, like after we got through the 2015 volatility and the early 2016 volatility, it really wasn't that crazy. It was more like 2017. Yes, there were some bigger red days here, but they got bought up, and this kind of formed the pattern for what's coming 2017. Now, I'm actually rather excited for what's happened in 2018 and like how it's looking for 2019 right now, because, you know, these are charts for traders. These are charts for you and me. These are charts to make money. Now, if you're holding stock, you're probably not doing that well. You're either flat or down some money if you purchased some stock this year, you know, because the market's been giving it back. But if you're an options trader, this is what's going to make or break your account. This is what's going to make you. But the thing is, you have to stay diligent. And if your trading strategy is going against you, you know, sit it out, paper trade. You know, like I was saying, like the last 2 or 3 weeks, I've been winning a lot. Like, and I don't want to say that to brag or anything, but when I win a lot, I start to get nervous, and I start to think to myself, hey, at some point, something's going to happen where I'm either going to give these gains back, or I need to slow things down. So for like the last week, I've been really slowing things down. Obviously, we're going into like a Thanksgiving break here. You know, can I have maybe a lower volume? I don't know what next week's going to bring. Maybe next week's going to be crazy. I don't know. But we have less trading days next week, and I really just wanted to kind of calm down. You know, we made a lot of money. I just really want to calm down, see what the market's going to do. But, you know, basically what I want to say is if you have a strategy that's paying out, always keep in mind that strategy is not going to always work. Adapt to the market. You got to adapt to the market. I don't know how many times I have to say that. And that's what I'm doing. That's what I've been doing. And sometimes when the market changes like it did in 2018, it may take you a few weeks or even months to figure out what you're going to do next, or what you're going to do. And what I recommend for that is to paper trade. If you're losing week after week after week, you know, take it, you know, open up a Thinkorswim Paper Money account, write down your trades here. You know, start to do that. And people say, hey, I don't actually learn unless I have skin in the game. Well, I'm like, well, at the end of the day, if you can't learn paper trading, I mean, maybe like trading is not for you, because as a trader or an investor, when you put money into the market, this is a business. Investing is a business. Trading is a business. This is not a savings account. Trading is not a savings account. This is a business. You either have money to keep your doors open, or you close them, just like anybody else. The restaurant down the street has either money to keep it open or it doesn't, and they close their doors. Same thing with traders. If you blow up your account, you don't have money to trade anymore. I mean, and you don't want to be the type of trader that keeps funding and funding and funding, and then 5 years later you look, oh, I could have had $100,000. So instead of learning how to trade, you kept putting your own money at risk. So that's why I really emphasize on paper trading, learning how to paper trade. And when the market changes, test those strategies out, back test them. You know, open up a paper trading account on Thinkorswim if you want to get a feel for the real deal. You're using the Thinkorswim platform and paper trading with, you know, obviously paper money, but it feels the same way. It looks the same way. You commit the same trades. I mean, so just keep an open mind on that. But I just want to show you, you know, what previous years look like, how to adapt, and just keep an open mind with that. So if this video was of value to you, hit that like button, hit the subscribe button, and we'll see you in the next video.